Well, it's the air that the economy breathes, and if anything happens to it, it will definitely affect the health of the economy. What am I talking about? I'm talking about the ex-pump price of fuel. And as you can see behind me, that is the trend we have seen so far since the beginning of the year and spanning to October last year. Tonight, this afternoon on the show, what we are going to do is to look at the trend of fuel prices, in fact, the rising fuel prices in the country, and we're asking a very simple question: why are fuel prices even going up at the pumps? We'll look at all the factors, look at the trend, what is happening on the international scale, and what could this simply do, or what could this simply mean to you if you are watching us, and what will be the impact in your pocket. And just like I said, this is like the air that the economy breathes. When the price is high, the economy gets heated. When the price gets low, everybody will jubilate. And so we are talking about fuel price, and as you already know, GPRTU is sounding some sort of caution and say that, well, if this trend should continue, what we would have to do is to go back to the negotiation table and look at adjusting transport fares. At the moment, it's at a level where only motorists are currently bearing the brunt. But when we do our analysis, you understand why fuel prices are going up. And as always, Caleb Ziblim is on the other side of the smart wall, will help me do the analysis. And we've seen the trend so far, and I want us to even start from GPRTU. We'll look at the trend, but GPRTU is the latest to come in and say that, well, we are seeing what is going on at the pumps, and we are not happy with it. At the beginning of the year, we all saw the successes we chalked, and as a result of that, we had to accept some 15% decrease or cuts in transport fares. Now we are seeing the trend go back to the level that they were at the beginning of the year. And so if it continues, we would have to possibly, reconsider our decision and maybe do some level of price adjustment. What more do we know about the decision that GPRTU has taken? And what more do we know in terms of going forward, fuel prices, and then also the factors that could possibly, end up in GPRTU possibly, deciding to even increase transport fares?
So, you remember that in around May thereabouts, transport fares reduced by about 15%. And it was mainly because of the stability of the city, and then which translated into reduced fuel prices at the pumps.
Yeah.
So when these two main factors, the city stability and also the price of fuel at the pumps came down, the government and transport users urged GPRTU to reduce their prices, which they did, about 15%. But then the transport unions are saying that when they reduce their prices, spare parts dealers did not reduce their prices. And spare parts are something that goes into maintaining the vehicles, the trust, and all of that. So that was the main problem for the the transport unions. So that one, the spare part dealers not reducing their prices. And also, if you look at the trend, which we get to very soon, the price of fuel has begun going up slightly. And if you compare that, so let's go to the next slide.
Yeah.
So if you compare the price of, so this line was when the transport unions reduced their prices. So it was around 12 cedis each, 12 cedis for diesel, 12 for petrol. So around that time, that's when we reduced the price of the transport fare by 15%. We are currently at 14 cedis for diesel and 13 cedis for petrol. So we are above where GPTRU and the other transport unions decided to reduce their fares by 15%. So they are saying that if this trend continues to go up, and as you can see from the trend, it's going up.
Yeah.
If this continues to happen, they have no choice but to reduce their, to increase their transport fares. And also you couple that with a city that has slightly weakened from back then when they reduced their prices. It was around 10 cedis. We are now doing 12 cedis, 40 pesos. So with all these factors, the transport unions say that if the government is not reining the price of fuel at the pumps, they will have no option than to increase the price of.
Well, I think at the beginning of the year, in the middle of the year, government was talking about enjoying some sort of windfall in terms of the ex-pump prices dropping at that point in time. And as a result of that, government got that sort of, reason to introduce that 1 cedi additional levy on fuel, which will come to, and we even tie in the GPRTU story a bit more. But the question is, on the show this afternoon, there's one question that we need to answer, and those watching us must understand why fuel prices are going up. And we need to understand that if you look at the price of fuel, and as you can see in this trend, one thing we have studied and I've seen that usually the price per liter of fuel is equivalent to the price of $1 in the economy. So they are almost tangential. Sometimes you have fuel prices being above the price of a dollar in the economy. And so once you have the dollar rate going down, fuel prices are likely to follow, and all of that. And we've been doing that analysis. And look at all of this. I mean, 4 factors we are seeing. The most important thing is the exchange rate situation, global crude oil prices, taxes and levies, as well as the profit margins. If you look at all of those factors, they actually determine what goes on into the price build-up.
And just on the factors, the last 2 are mostly fixed. So for the taxes and levies, unless the government decides to increase more, that's going to affect the prices.
Or decide to scrap.
And also with the profit margin, the companies usually maintain it unless there's some factors. So it's just the main 2, the first 2. The exchange rate, like you rightly said, and then the crude oil price on the world markets. These 2 are the main factors that will affect how much customers pay at the pumps.
So I mean, the key focus has to do with the exchange rate situation. And I think when we had Marketplace this morning, there was one question that was asked that how do we even consolidate gains when we get the gains that we get from the exchange rate situation? Because it looks like the exchange rate situation determines 3 most important things in the economy: fuel prices, inflation, and if you care to know, even the policy rate that will be determined. All of those factors are very, very important. But if you look at the exchange rate situation, what we are learning in terms of the correlation we are drawing between it and the exchange, the export price of fuel, is that if we are not able to maintain the exchange rate situation, what happens is that it goes ahead to affect the energy sector, especially the price of fuel. And I remember here on the show when fuel prices, the exchange rate situation began improving. We said that the most important thing we need to look at was consolidation, because once you lose grasp of it, what will happen is that it's going to affect fuel prices. And around that time, government made an important and a sweet, excuse or reason that we have the exchange rate under control. Fuel prices are dropping. You have windfalls, and so we have the chance to now introduce, the 1 cedi additional levy on the export price of fuel. And we said that if you are introducing the levy, which you said that the last 2 are fixed. So what you have control over the last 2, what you don't have control over is the first 2. But the first one, even governments can have some level of control, because we are even learning that the Bank of Ghana has decided to even step in with some about 1.5 billion intervention in the last quarter of the year. The question is, if you look at the exchange rate situation, is it proper justification? The question is it the main reason why we are seeing fuel price going up? Because I've been looking at the external sector and the external outlook, and what I see is that it's a bit favorable compared to maybe last year or last 2 years. It's still very favorable because you see crude oil prices and the world market, Brent crude and all of that, are still not even at fair value yet. And we've not seen any sort of pressure, maybe like we saw when there was Israel-Iran war and all of that. We've not seen that sort of pressure, although there are geopolitical elements at play here. But in terms of the external factors, they look very, very stable. And that's one of the reasons why even the Bank of Ghana decided to cut monetary policy rate by 350 basis points. It shows that the Bank of Ghana believe external factors will not really go south if you look at the whole picture. But it looks like what is happening currently to fuel prices are predominantly domestic. Do you actually belong to this school of thought?
Well, like you rightly said, the main reason that fuel prices are going up right now is because of the first factor, the exchange rate. Because if you look at the crude oil price on the market, and we'll get to that very shortly, it has been on a downward slope. Even though it's still elevated a bit comparing to earlier this year, it's still on a downward slope. And as you can see, last year we reached a high of $82 per barrel. But right now we are doing $66. And then when the conflicts in the Middle East erupted, we did around 77.
That was even an outlier.
That was an outlier, and that's the highest we've seen so far this year. So we are still very comfortable when you are talking about the price of crude on the market. So, and as you can see again, it's fluctuating, but it's still very stable. Around $60, between $60 and $70 per barrel. So if you're having a very relatively stable price of crude oil on the market, and then the other 2 factors we talk about, the profit margins and then the taxes and levies, if those things are also stable, just the 1 cedi additional levy that was introduced earlier this year, then the only thing that's pushing the price of oil up so far is the exchange rates. And we can see that the exchange rates, the cedi is actually losing a little bit of value as compared to the time when fuel prices started dropping. Because, yeah, so let's go to the next slide.
Yeah.
So you can see that it was around 15 cedis, 50%, very stable. And once your exchange rate is stable, fuel prices will also stabilize, which is why we saw the continuous drop, because traders and the oil marketing companies could predict very well. But then, and also when it dropped to 10 cedis, that's when we saw the massive drop.
Yeah.
And then it stabilized at 10 cedis again. So now that the cedi is rising a bit again, even though it's not that drastic, it's still rising. And once it's rising, it's obviously going to fit into the price of your export prices. And also, even though the rise is pretty marginal from 10 to 12.4, and the planning, because OMC is now seeing that the value of the cedi is losing, once they start planning for their next imports and everything, they factor that into the price of fuel.
The hedge.
Exactly, which is why the BOG's announcement that they are going to intervene with the gold purchase program and about $1.15 billion in October alone. This means that the cedi should see some stability in the next few months. And this again should stabilize fuel prices. So which is why I think when the government is meeting with the OMCs and then the transport unions, they're going to tell them that we have indication from the BOG that the cedi is going to stabilize very soon. So hold on. And the transport unions are very patient. They said, if you don't control the price of fuel at the pumps, we're going to increase the price of transport fares.
One key factor which I picked from your submission is certainty or uncertainty.
Yeah.
When OMCs are uncertain about the direction of the exchange rate, what happens is that you see that in the price build-up or the export price of fuel. Once you begin to have stability, fuel prices will also have stability. So I actually want us to actually establish that connection. Just look at February and January when fuel prices were around 15 cedis, 99 pesos, and 15 cedis, 85 pesos.
Almost 16 cedis.
Yeah, 16 cedis. Just look at it. If you look at this part of the graph where you have it peaking around 15 cedis, 99 pesos, and 15 cedis, 85 pesos, just look at the exchange rate situation. Look at it. January and February was still around 15 cedis, 50 pesos. So the point we were making that if you have the exchange rates going up, or wherever the dollar is selling, or how much the dollar is selling, depicts how much a liter of fuel is also selling. There's a direct correlation between the two of them. And so when we saw that significant dip from April to June and maybe July, what you see is that it was that same experience we saw with the exchange rate situation. So exchange rate dropping from May, June, and July to 10 cedis, 10 pesos. And I remember even the market leader, Star Oil, at a point was able to sell fuel to its customers around a liter. Let's say petrol was around 10 cedis, 25 pesos, and 10 cedis, 50 pesos. Yeah. Star Oil, I remember it was selling around that time. Why? Because the dollar had dropped to that level that gave OMCs that sort of breathing space to actually cut down their cost of imports and all of that. Now, what happens is that many are saying that, well, we are not seeing fuel prices go up as high as they did in 2020 and 2022 and 2023. Yeah. It's simply because when the dollar rate was around 10 cedis and 11 cedis, OMCs took that opportunity and stocked their inventories. The stockpiles actually increased and all, because everybody was taking advantage of that situation. And Bank of Ghana, remember at that point in time, was also intervening. So there were forex available for them to import. And that's the reason why you didn't really see the prices actually increasing at that, faster rate, and maybe still hitting around 13 cedis, 35 pesos and all of that. It's simply because OMCs were able to buy at a relatively cheaper, cost when the exchange rate was very stable. So now that they are almost done selling that stockpile or that inventory, they would have to restock, and they are restocking at a dollar rate. Let's use the Bank of Ghana rate of 12 cedis, 40 pesos, compared to 10 cedis, 10 pesos. If you are an OMC, what you simply do is that, well, that is a direct justification that I have to increase my the price of what I'm selling. Because if you look at even the market leader, which is Star Oil, at a point, Star Oil was able to sell 10 cedis and 11 cedis. But today I checked, even Star Oil is selling about 13 cedis.
Yeah.
It simply tells you that the exchange rate situation isn't very favorable. And the question is, I know OMCs will start importing again for the first quarter of next year. And we are all waiting because we all know that the last quarter of the year there's always a lifeline for the city. And we've already seen the announcement by the Bank of Ghana saying that, well, we'll come to the market with a 1.15 billion intervention. When that happens, there will be that breathing space for the city again.
Yeah.
And the expectation is that fuel prices, or the expectation is that, the exchange rate situation will cool down a bit, the dollar rate will go down a bit, and that can affect fuel prices. But the question is, that is some sort of expectation. In real terms, that 1.15 billion, we know Bank of Ghana has not intervened in a long time. Will it be enough to give the economy that sort of lifeline for fuel prices to even possibly go back to the level they were maybe in July and August?
Well, so the BOG's reason for intervening is that they are coming with a gold purchase program.
Yeah, they need to have a reason why they can now intervene.
Exactly. And then with the gold purchase program, price of gold right now is all-time high. It just passed $4,000 per ounce for the first time ever. And then with this same trend we are seeing, primarily because the US shut down Trump's policies and geopolitics and all of that, price of gold is expected to keep going up in the short run. So once it keeps going up, more forex is going to come into the economy. And the Bank of Ghana, again, because they are relying on the gold purchase program to intervene, they're going to get more forex from the gold purchase program. And they can intervene even more.
They will have to say gold board.
Yeah, gold board through the gold purchase program. So once they can intervene more, it means the city is going to stabilize. And that brings us into a new conversation whether the BOG should be intervening anyway, because, if you're having a hay season, keep it for the for the dry season and all of that. But then aside the reasons for intervening in the markets in the first place, once we have all these indications, it means that the city is going to stabilize in the next few months. And like you said earlier, the last quarter of every year, the city gets some hay season because of some factors like the remittances come in, people come to spend a vacation in the country and all of that. So once that happens in the last quarter of the year, there's going to be excess forex in the system. OMCs can get forex easier. We're going to put less demand on the CD on the dollar, which will reduce the price of the CD and all of that. So that's good news going forward into the last quarter of 2025. And once this happens, this should directly affect the price of fuel. Because like we saw earlier, when the exchange rate is favorable, we experience at the pumps. It's a direct correlation.
Yeah.
When it dropped, we experience it. When it goes up, we experience it, which is why the previous government brought on the Gold for Oil program. Because at that time, we didn't have forex to go and buy the fuel products.
And fuel prices dropped because of gold for oil, I remember.
Exactly. So once you have a favorable exchange rate situation and you can provide forex to OMCs and all of that to import their crude, their refined petroleum at a relatively cheap price, we're going to benefit from that. And all the indications so far, the higher gold prices on the market, BOG's willingness, and even the announcement to intervene, because usually we don't hear announcement from the BOG that they intervene.
Even the quantum.
Exactly.
That's going to come in.
Yeah, we don't hear all of these so many times. So once the BOG is already announcing
positive sentiment,
the signal that is going to send across the market means that the BOG is in a very good position. I remember our reserves are over $10 billion. I'm sure by now it's gone back to $11 billion. So the BOG has the firepower to intervene in the markets. Now, and we'll talk about this later, whether they should even do this. But then once you have all these signals come to the market players, they can then confidently say that, okay, if I'm ordering my fuel products for the next 2 or 3 months or the next month, I know that at the end of next month, the CD will still be favorable. So how much I sell my fuel, I can get enough CDs to convert to Forex and then go and buy the same amount of petroleum products and bring it back to the economy, which means they are confident. So once the confidence is there, I don't think it should be spiraling too out of control.
There are 3 factors that affect fuel prices. First one is external factors.
Yeah.
Second one is fiscal policy. The third one will be monetary policy.
Yeah.
On monetary policy, we know definitely controlled by the BOG, and I'm not even talking about policy rate cuts and all of that. I'm talking about intervention, right? And many will say we are in the hands of the Bank of Ghana at the moment because how fast Bank of Ghana intervenes and the quantum of money they bring to the market determines how much the export price of fuel will be sold.
Yeah.
And we are beginning to understand that at the moment because of the structural issues where Bank of Ghana can decide to intervene, but sometimes when they bring the money to the market, it doesn't find itself in the hands of the the people, the strategic people, the strategic sectors that the government want the monies to go or the forests to go. And that's another key challenge. That's still the reason why Bank of Ghana is still playing an integral role in spearheading the intervention. So now that we are in the hands of the Bank of Ghana, it simply means that as and when Bank of Ghana will decide to come in, the quantum of forex involved will determine the price of fuel at the pumps. And then also, there's another interesting aspect when we talk about the fiscal side, which is usually controlled by government. Fiscal policy in this situation will be taxes. Yep. And remember, there was that 1 cedi additional levy on the export price of fuel, and we've been looking at even the price build-up. This is a tall list of margins and levies and taxes we have.
I think we have about 11 of them on petroleum products.
It's crazy because this is a fiscal side of the whole thing where if government currently decide that, well, at this moment, I think that we don't want GPRTU to increase price again. So we are taking away the 1 cedi additional levy on fuel, which I think will be difficult at this point anyway because there was no sunset clause. Yeah. That will be a fiscal policy at this moment. But you assess the fiscal policy aspects and you see that government has its hands tied at the moment. Why? Because government also need money from the taxes to be able to battle the 3.1 billion legacy debt facing the energy sector, to be able to buy fuel, to power the thermal plant that will give us power. And we can all agree to and attest to the fact that electricity supply has been very stable since the introduction of the 1 cedi level. Yeah. Levy. But the question is, although power has been stable in our homes, the cost we are paying is the fact that that additional layer of tax that has been introduced on the price build-up is making us all pay high at the pumps. So there is that trade-off. So the question I'm asking is, should there be, do you see that on the fiscal side, government's hands are very tight and maybe the only thing that can help whilst the external factor stays constant is the monetary aspect where Bank of Ghana can come in at this point and give BDCs money and all of that. On the fiscal side, what can government do? Should they start thinking about scrapping taxes or suspending some of them?
I don't think the energy minister will be very happy.
I'm not sure you will be.
You'll not be happy with this conversation because the additional ESLA levy is really was helping stabilize the energy sector so far. Because prior to this, the government had to find excess revenue to go and buy fuel and then pay for gas to power the thermal plants. But because of this additional 1 cedi levy, it's gone directly into that. So now the other ECG and all the other power generators and distributors are now a bit relaxed, which is why we are seeing these this stabilization of the energy sector and our grid so far. So I do not think, and honestly, I don't think the government is going to touch the taxes so far. Because also, if you compare the price of fuel before they introduced the ESLA levy and now, we are still not there yet. Yeah. Because like we saw on the graph, we're trading around 16 cedis per liter. Around 16 cedis, 15.99, 15.85.
Diesel.
For diesel. And the government came around April, they're about to introduce the 1 cedi additional levy. So I think the introduction of the levy is not going away anytime soon because the economy needs it. And then the government and then the energy ministry will come with strong justifications as why the government should not scrap it. So I think, and that's why it's very important to be in sync with your fiscal and monetary authorities. Yeah. Once the BOG and then the finance ministry are on the same playing level and they understand the needs from each other, I think there should be some coordination and all of that going on. Which is why the BOG appears to be very strategic and high releasing dollars onto the markets. But then the quantum of dollars, and also it's very interesting because right now the IMF is in town and they are auditing us for the last disbursement and possibly approval for the next disbursement. So if the IMF is in town and the BOG can come out and say that we are bringing 1.15 onto the markets, it means that they have a steady control of forex at that side. Which is why this time, when they were making the announcements, the governor intentionally said that this is from the domestic gold purchase program, which is not from their reserves.
So the source is very important.
So the source is very important for the IMF. And when we did the story earlier this year that they intervened with 1.4 billion, the BOG quickly came out to say that they intervened because the money is coming from the domestic gold purchase program.
Say, where is the sin?
Exactly. So once we have all these indications that the exchange rate situation is not out of hand yet, and then the BOG is willing and ready to step in anytime with proceeds from the domestic purchase gold program or gold board, and also the price of gold is at all-time high, $4,000 per ounce. We've never seen this before. I think the situation is favorable in the coming months.
Well, I think that the clear picture or the clear signal or message is that if the dollar goes to 14 cedis,
Yeah.
fuel prices will go to 15 cedis. If the dollar decides to go to 11 cedis, fuel prices will go to maybe 12 cedis or 10 cedis. So it depends on where the dollar rate will be. Fuel prices will always, decide to catch up. Because, I mean, you make a point, but because we've seen from this graph that when Bank of Ghana started the intervention from the second quarter of the year, we saw fuel prices coming down because there were forex available. Exactly. Bank of Ghana could give BDCs what they want and all of that. And so the key point is that what is happening is purely domestic pressure coming from the exchange rate situation. Yeah. We've seen the external side. Looks very positive, in our favor.
Yeah. In a long time, we've not seen this kind of positive.
Exactly. And other factors are fixed at the moment, and we know governments will not touch the fiscal side because they still need that, once the additional levy inflow to buy fuel to power the thermal plants and all of that. But your final comment, you've seen this graph. Bank of Ghana says that we will come in, but when they come in, where do you expect fuel prices to be?
Well, I think the main thing is that because of also, if you look at the other side, the cocoa sector, they gave cocoa farmers some increment recently because of how the city is doing so far, and also Cote d'Ivoire and all of that. So if the city goes out of control, cocoa farmers will start revolting, and that complicates things so much. So I think the BOG is intentionally coming to the market to stabilize things, to prevent the cocoa farmers' fuel prices. So many things are interlinked so far. So I don't think things are going to get out of hand so far.
Well, that's a tough decision by the BOG, but definitely they made it clear that they will intervene $1.15 billion US.
That's October.
Yeah. How that will influence fuel prices, wait to analyze here on Beyond the Numbers. My name is Isaac Kofi, and I did this with
Caleb Zebulon.